All right, welcome back, everyone. I got Emily Lopez. We are gonna dig into all the news in real estate right now. That talks about like no minimum credit score, 50-year mortgage. But welcome back, Emily.
Hey, how's it going?
Good, good. I just want everyone to know Emily has started a new YouTube channel. So I did put the links to both channels in the chat. So there she does have two. She's trying to separate them, right? So but let's kind of dig into all the news because I did see a video recently on your channel, the real estate one, that was talking about getting rid of the no minimum credit score, I believe. Was that what it was titled or whatnot? But what did you find out about that?
So I saw an article and it was really clickbaity, and it just kind of had said for Fannie Mae in like November 15th, they're going to reduce or remove the minimum middle credit score of 620 for underwriting the Fannie Mae loans. And so, but the way that the headline was really made it look like, to me as a consumer, if I didn't have the red flags of the real estate brain, it made it seem like they were trying to make it look like anyone can get a loan. If you have bad credit, you can get a loan. It was a clickbaity title. So I went and clicked on it. And basically, they're just creating an option for, and I can't remember what it was called, but they want to look at more holistically. So, those people that have been really smart with their money, maybe they're a Dave Ramsey person and they don't have debt. Or maybe you're young and you're just out of school and you got a good job, or you're just out of college and you got a good job and you've paid your rent reliably, yet maybe had a phone bill in your name that you paid reliably, certain things that maybe you didn't credit report, but you have some good payment history. So that's the point. They're trying to look at people not that have bad debt, just that don't really have debt and don't have credit established. And so they're going to holistically, if they use this metric, which not everybody is going to or has to, they can take into consideration some of those other things for someone who is responsible. So if you come in with a 500 credit score, it's not for you. This is for somebody that maybe just doesn't have established credit. So it's kind of the way that people are trying to get you to click on articles is kind of clickbaity. And if you read it, it says Fannie to drop it like Freddie had. So I think Freddie dropped it years before too. And so I don't think it's going to change anything. It's just something that gets people's attention.
Did you say holistically? I think that might be the first time that that word has been used on my channel. But yeah, I definitely feel it was clickbaity, right? I mean, definitely, even all this talk about the 50-year mortgage, it's a lot of distraction in a sense. And I think you kind of touched on it too. It's not like now all of a sudden you don't need a good credit score and you can just purchase a home, right?
And I mean, the other thing too that a lot of people don't know is when you Google the rules for a mortgage, that's for the to be sold on the secondary, the parameters that they have to fall within. But still, mortgage brokers and lenders on the front end, they usually have additional overlays. And so, like, I talked to a friend that's a mortgage broker, and he said just because that's the program and what they'll allow, most mortgage brokers and lenders are going to have their additional overlays, and it doesn't matter anyway. They're going to keep parameters in place.
Do see a
Oh,
lot of people tuning in this night. I see Alex, All Nighter Hider. I see Val, Mikey, Buzztune, uh, Jason. So yeah, like I did mention, if you guys haven't heard, Emily does have a new YouTube channel out, trying to separate her DIY stuff and just focus more on real estate. So go if you haven't, go please subscribe there. I think she's up to 50 now. You said right? So now you can live stream. We got to figure that out though, right?
yeah. So if anybody knows, I have one email address with Gmail with two YouTube channels. And I had linked my old YouTube channel when we did the first stream here. And now it will not let me connect my new channel. So if you know how to fix that and you're good at tech, I'll keep doing some research, but let me know so I can stream it on the real estate channel next time. But don't know
Yeah,
yet.
we'll figure that out. Hey, Hyder, I see Jeff, JLD, he's in York, Pennsylvania also. And letting everyone know, if you have any insights on the Pittsburgh market, Emily definitely is going to probably reach out to you. She wants to know more information
Or
about the
Detroit.
Pittsburgh or and Detroit. So Ali, if Ali tunes in, she wants to get more information on those markets. She's looking to maybe expand her reach and investing. She's doing too much work in Wyoming, I believe, right?
I'm trying to scale. I want to keep doing what I'm doing here, but I want to be have some investments where someone else is actioning as far as the remodels and stuff like that, because I'm limiting, you only have so many hours in a day. You can only do so much with your own time. So if I can't help and I have something going over here that I can't touch, and then I have my own stuff going in my area, that's kind of my goal.
Hey, he just heard his name. Ali is tuning in. So Ali, Emily is connecting with you also to know more about the Detroit market. So that's
And
super
thank
cool.
you. I already have. He's been super, super helpful. So thank you,
And
Ali.
Ali, I'm going to reach out to you. Well, I'll just tell you if you're still here, Zuber did mention the video hasn't dropped yet, but he is going to allow, like he's mentioned, 20 kids, teenagers, free for the ORAT event in February. And he said 19 is qualifies as a teenager. So I believe you told me your son was 19. So if you wanted, your son can go free to the event and also maybe have a one-on-one with Cody Davis. So that's super cool. So Ali, I'll let you know about that later. But yeah, so I guess like we said, the minimum removing the minimum credit score is kind of a nothing burger, I would say a little bit, right? It's just a lot of distraction. But the 50-year mortgage talk, and we've kind of been talking about it all week on different live streams I've been having. I kind of want everyone's take on it. What's their point of view? So where are you at on it? What's your thoughts initially on the 50-year mortgage?
I don't think it's going to happen. I don't think it necessarily matters what our thoughts are. And the reason is there are, I'm not political. I think everybody is crazy with the way they, but generally when you go from one administration to another administration, especially if it changes party lines, they don't like to support what the other one has started. And from the mortgage brokers I've talked to make this change, there's thousands and thousands and thousands of back end pages of laws and rules about mortgage. And to change this, they would have to modify what's there or add a lot. And that would take anyone I've talked to that's actually a mortgage broker or owns a mortgage company have told me they think this would take a couple of years to make this change, unless it was really focused on for some reason. And so I think that if they started it, unless somehow it was accelerated, by the time Trump is not president anymore, and I'm not saying this is going to happen, but historically, I think we see a lot of Democratic president, Democrat, Republican. I think it goes back and forth. And so if we, after Trump, the next president is a Democrat, I think they'll kill whatever process is happening for their own agendas. They're going to prioritize everybody in a different direction, and it will not have had time to get done, and it will not get finished. So again, unless they put all, everyone on hand to make it happen quickly, I just don't think there's time logistically to make it happen with the process that has to follow. So I just don't see that. I just don't see there being any way unless they fast track it somehow.
Uh, what is your take from an investor standpoint, though? Do you, if it's available for everyone, because we don't know the terms that it might be, but as an investor, would you take advantage of it, you think?
So first of all, I don't think it's going to be available to investors. I think if they do something like this, it is something that is going to be like a USDA program. It's going to be for first-time home buyers or owner occupant. But if it were, I'll answer your question. I just don't think that's the way it would go if it was implemented. Not I think it depends on your market. I think there's always a place for a tool. And I think if that's the way for you to get your hands on a property or to keep your ratios the way your ratios need to be able to invest more, and then you go back and you refi, or even though it's on that schedule, you pay it much quicker. But I'm not necessarily cash flow, get as many as I can. A lot of my properties are 15 and 20-year mortgages. So I haven't even used the 30-year mortgage. I have maybe 3 of my mortgages are 30-year mortgages, and everything else I have is 15 or 20. So yes, I want to acquire more properties, but I'm very risk adverse. So I heard you guys talking the other day, and you guys were saying that's basically almost like not amortizing up front, because so little goes to your principal. So I guess it's just what your strategy is, and if you're being really careful, or maybe you're like, hey, I'm buying this, and this property is actually financeable, not like a super distressed purchase, and I can buy it on a 50-year, renovate it, so I have more cash to do my renovation, and then refi it after into a shorter term. But I just think paying so much towards interest and so little towards principal is not a good long term. It's like a short-term tool in my mind as an investor.
Let's see here. A lot of people tuning in today. Janitor on Fire has another channel. Dan and Win. Okay, well, another one. But thanks for tuning in, man. There is a question here I saw from Curtis, PE turned RE. I believe he's talking about possibly the portable mortgage, or
Yes.
but he is saying, have you seen the substitution of collateral proposed?
No, tell us more about, because I think yesterday my husband sent me an article where after this whole week of 50-year mortgage stuff, then they start mentioning the portable. And I didn't really get a look into it that much, but it seems like it makes a little more sense. Substitution of collateral. Does anybody know more about that, or do you know more about that, Mark?
I know that was mentioned recently about portable mortgage, where you kind of keep the interest rate. You're going to get the next property. So basically, you're substituting the asset or changing the asset that is collateralized against. I that I think that would be the game changer more than the 50-year mortgage if that becomes possible. I know there's a lot of logistics around it, and I think it would be challenging to pull that off. But it does sound like they are actually taking it serious, and they're trying to figure out a way if it can work. So, but I think that would be definitely a game changer for a lot of people to keep that low interest rate possible and move on to the next property. Hyder has a great question. Will closing costs be any different with a 50-year mortgage?
I believe so. Everything's more expensive if there's more risk to the lender. So your interest rate's going to be higher. And I think there's going to be, you know, how like you do a VA loan, but there's a big funding fee. Like my husband was in the military. We've never used a VA loan because it never made the most sense for us after you pay the fees and you fold them in, and then your loan is more than you bought the house for. And so unless you have service disability and you have that discounted, those fees are expensive, because I get what they're trying to do, but it's still a big risk to the lender. And so I think here, where it's bigger risk to the lender, I think there's going to be extra fees loaded in there. They're never going to take on more risk without taking more money, because they're in the money making business, I think.
Yeah, absolutely. I think that's what always frustrates me when people are like, "Oh, I'm gonna have to pay this much interest over 50 years," right? And like people are saying, well, the bank is providing a service, right? So they're gonna need to make money also. And I did see on Facebook, I'm not sure if those of you follow Jay Scott. He's part of Bigger Pockets, but someone did put a post out about, well, why can't they just make it like a 50-50 payment throughout the life of the 50-year, right? Part going to principal, part interest. And Jay Scott broke it down. Like if you look at it over the 50 years, if that's how it was structured, the bank would actually be losing money from it. It might be a 7% interest they're charging, but over the life of it, I think they're only making 4% or something like that. But basically, he was saying, yeah, it can't be structured that way from a math equation where the bank is actually going to be losing money by lending you the money from an interest standpoint. So, but yeah, someone always has to make money, right? So that's the thing. I don't. It frustrates me when people are looking at it from the bank is going to make money in this thing, but they're the ones taking on the risk, right, for 50 years basically.
Well, and
Uh,
it's really scary. I think they probably, I'm sure, have statistics of how many people default. So they have to front load how much they're making, because X percent, whatever research they've done, are going to default. So if they can make more upfront, it's not as big of a hit. If you wanted me to give you $500,000 or $250,000, I'm not going to be like, yeah, sure, let's just do it for fun, like, because I can't, like, it is a business and they have to make money or they wouldn't do it. It's so weird how people, okay, don't get a loan then if you don't like it's business, just like we're doing business to make money too.
Dion from Dion Talk Financial Freedom says fractional lending makes the banks not care about what rate they make. Yeah. Um, Kurt, Curtis PE turned RE says, I think a portable mortgage could help unlock the supply side. Yeah, definitely. So I think that is a big game changer if it does come to fruition. But I also see if the 50-year mortgage does become available to everyone, I can see that opening up the supply side also too, right? So if kind of been in your home for a long time, and that nothing makes sense from interest rate currently, and then you have the opportunity to get the next home with a 50-year mortgage on it, that could definitely open up the lower price point supply side of properties. Hey, Brian, I see Brian tuning in. So Brian's in Virginia, but he also invests in Pittsburgh. So like I was telling you earlier, we do have a good Pittsburgh group forming.
I
Oh,
think
actually,
oh, sorry, go ahead.
no, go ahead. Go ahead while I look for
I
the
think
next
on the
question.
portable mortgage thing, I can't tell you how many people have told me, "We bought a home thinking it would be a starter home, and we did not plan to be here very long, but there is no way we're gonna give up a 2.75 or a 3% interest rate." So I think talking about unlocking supply, that is so true. Or even people that didn't necessarily want to be investors or landlords. I have had probably 6, not that this helps the supply on the market, but what's best for the person. I've probably had 6 to 9 people come to me this year as a realtor that wanna sell their house, and I'm like, "What's your interest rate?" There are people I know that have good jobs. They're in a, and I have the conversation. Have you ever considered keeping at least one investment property? Because 2.5% is free money. We will never ever see that again, ever. That's insane. And so I have convinced a handful of people to at least try or consider the landlord thing, because you're never going to be able to borrow money at that rate and get that type of return. So I think the portable, whether people have to sell to buy or whether people just are really considering if it's worth getting rid of that property, I think that would really open up supply for sure.
Janitor on Fire, I believe he's saying I have a paid off rental property. I wonder if I should put a 50-year or 50,000 mortgage on it over 50 year. Wait, I wonder if I should put a 50,000 mortgage on it over 50-year mortgage. I think he's asking if you should take out a $50,000 mortgage on it over 50 years. I think is what he's asking. Yeah. Well, I mean, I, I I think my stance has somewhat changed a little bit on having a paid off property. I think maybe having a primary that's paid off is definitely a safe place to be. And I think I think John Goodman talked about it in The Gambler, right? You get a paid off property, have some money in the bank, and that's FU money, right? Now you can do everything from a safe space and you can invest accordingly. You can maybe take a little more risk, but it puts you definitely in a position to take a little more risk if you have this kind of fallback option. So I definitely can see the benefits of having a paid off primary. But like rentals and everything else, I definitely would probably have some sort of leverage on those properties, as even if it's only 50% or whatnot. But definitely during growth phase, I probably want more leverage on it. But I would find some comfort level at a lower leverage point once I kind of get into the maybe chill phase of things. um
I
let's
don't
see.
think so. First of all, like I showed a house the other day and the person's like, "Well, I'm just I can qualify for more if I do the 50-year." Again, I don't think it's happening, and it's not happening anytime soon, even if it does. And so you may want to action something sooner than this would become available for you. So I would consider, like, if you have it paid off and you want to have money to invest in other things, you're probably going to want to do something sooner than this is available if you need that capital. But the other thing too is do the numbers. This, with the way it amortizes, this may not be better. It might be better just to do a line of credit against this property that revolves, that you can use to invest and pay back. I know that it's a little harder to get a line of credit against an investment property, but if it's paid off, that you should be able to. I mean, I've talked to my local bank about doing that on some of my rentals to fund flips, and they'll do it. And so the 50,000 over 50 years, there might be a better way for you to pull 50 to invest somewhere else than to go this strategy if you did the math. So I would just kind of run the numbers, and this might not be your best option, even if it was available.
Brian Builds Wealth says Graham Stephan had an interesting thought on portable mortgages. Banks count on mortgages getting refinanced in 8-ish years. The portable mortgage forces them to hold mortgages longer. That's a big problem for sub 4% mortgages. Yeah. So yeah, definitely, I think there's a lot of logistics involved. But yeah, if it does come to fruition, I think that's definitely a game changer and definitely is going to unlock a lot of supply out there. I would definitely take advantage of it.
I think
Uh,
there's going to be outrage too, because people already, you see all the memes about the boomers and the houses they got in for $6 and all that. People are going to, and then it's true, if you are established and were able to buy, maybe you're older, maybe your money was right sooner, you were able to buy with good interest rates, then that just makes people that already have a certain level of wealth or acquisition of property have a leg up. Because if I can port my 3% interest rate over to a $750,000 property, but somebody new coming into the market that just is getting started is bidding on that same property and their interest rate is 6 or 7%, they're not going to be able to make the same type of offer. So it's going to give an advantage. So I think there's going to be a fair amount of outcry across party lines where anything that had to be voted on or agreed to, I can see that being a real, I think it could help a lot of people, but I can see where people go, this is going to create more inequity. And so I think that conversation is going to come up too.
All Nighter Hider does say I saw some math about a 400K extra over the extra 20 years. I think for the 50-year mortgage, but adjusted for inflation, how much has that extra 400K afforded someone in appreciation of the property to be determined? I gladly pay an extra 400K for an additional 500K in appreciation. Yeah. So I think Dion, who was on Tuesday, that was kind of, and he even his recap with Michael Zuber and Lumberjack when they were talking about the 50-year mortgage. That's a little bit on his take, right? I forget what the chart he put up from what year 1974, I believe. But if you look at the equity that people have built in their homes, majority is from appreciation and not equity pay down, right? Principal pay down. So for a lot of people, yeah, the principal pay down is not where they're building their wealth, right? So it's getting into the property and it's the appreciation over time.
So I have this chart over here. This is from an old video I did years ago, but I was talking about people trying to time the market. I just never erased it. Let me grab this whiteboard. I don't know if we can get this to show up.
Yeah. Hold on. Let me flip your camera. There we go.
Okay. So high low interest rates per decade and average price point a house over the year. Does that even show up or is it?
It does. No, it does. Yeah.
So
No.
in 1970, 24.4. High interest rate was 10.03, low was 7.31 for like average price points. And so, people talk about dollar cost averaging in the stock market. It's kind of the same with real estate.
I like it. We might have to do a whiteboard. I'm terrible at it. You can do the whiteboard.
This has literally been on this whiteboard for like 2 years.
Dion just sent me the chart. Hold on. Let's see if I can get it on here. You gotta hold the conversation real quick while I try to get this chart.
All right. So yeah, I get the equity conversation and that your value is going to go up based on market inflation, not just also what you pay down. I think the thing with any of these tools is they're tools and they make sense if you are in real estate and you're doing your research and you are using them to your advantage and you know your numbers. The problem is and that's why we have all these rules in lending for mortgage brokers and realtors to explain things to their clients. There are so many people who there's all these disclosures to make sure they understand what they're signing, what they're agreeing to, what they're getting in for. And the people that need the help the most, that don't have the financial education, that haven't been educated on the way numbers work, they're going to be the ones that kind of get burned because they're not doing the research or have access to the information in the same way that an investor who's really doubling down on doing their due diligence would. Okay, you got it up now.
Yeah, I'm kind of amazed I figured out how to do it on the fly. But so Dion is saying Freddie Mac did a study from 1970 to 2024. 90% of equity came from appreciation, and that's kind of where this chart's pointing out, right? So it shows from 1970 to 2024 the home price, median home price, and then over time, right? So as you can see, yeah, a lot of it is due to appreciation. He did get a little pushback from Zuber, and I'm not sure where I forgot what Lumberjack's stance was, but they were talking about maybe it is a little bit skewed for the coast area. A lot of it, that's where a lot of the appreciation comes into play. So I think there, Millennial Mike, who does invest in Gary, Indiana, is going to be coming out with a video breaking down maybe Gary's median home price over the years, because definitely that's been a market that has gone up and down in price point. So Val says the whiteboard is cool. So Val is a realtor, firefighter in Maui. So definitely, if anyone wants to purchase something in Maui, reach out to Val. I know Dion's brother is looking to maybe possibly buy something in Maui. So that was a good guy to connect with too, Dion. Let's see. Yep. So Hyder does say Dion's point is really just currency debasement. Yeah. Hold on. Let me.
And people continue to borrow even if they pay down their properties. I have so many clients over the years when I just look at the different situations people are in and we see how much debt they have on a property or don't have. And we are such a consumerism economy, and people take on so much debt and borrow so much in our society. And so I'll have people that have had properties for years that bought them for a handshake and $20,000, but they either have refinanced, they have second mortgages. And so anytime they have the opportunity to pull money out, they're going to, and not to invest, just like to buy dumb stuff. And so to me, the 50-year mortgage is no different. I mean, it's different in the numbers and stuff, but we live in a debt society, and people are going to take on debt wherever they can. And a lot of people, that's why so many people are into this, financial independence movement, because they've been enslaved to that for many years and they're learning. But people are just done with debt, and they're never not going to be done with debt if it's available to them.
To Josh Burdick's point, he says own assets or get left behind.
Yeah.
Anything else you want to touch on the 50-year mortgage or credit score type thing? Or I did want to ask you a kind of a, maybe we can have the audience chime in on what your thought process and what you're thinking about, if you're willing to share that a little bit, maybe looking outside your market and maybe what thoughts they have for that. But anything else you have on? All right. So do you want to kind of share where you're at right now in your market, what you're doing, and where your head is and thought process is?
Sure. So I have in my market, we were kind of, and I'll kind of talk about numbers and what we have going on here. So right now, where I live, I'm in Rock Springs, Wyoming, and we have a good market. You can buy and you can rent properties out, and they make sense. You could flip properties here, and it makes sense. But one thing that I told you this off of air, one thing that I have struggled with, because I am a real estate broker and I am a general contractor, is doing everything myself, and you can't scale that. I can maybe get one or two properties done a year if I'm not bringing help in as far as a renovation, but I want to be able to scale more and do more than that. And so I had years ago heard Brandon Turner on Bigger Pockets talk about when he was growing his portfolio, he had to sell all of his tools because he would fix everything himself. He couldn't stop. And so we bought a fourplex this year. And my goal with the fourplex was, when I bought it, every unit was occupied. Because normally I go in, and even if it doesn't really need a renovation, I'm tearing things apart. I'm adding bathrooms. I'm renovating the kitchen. I'm really overdoing it. So my goal with this one, especially because every unit was occupied. Sorry, my cat is shredding papers. She's a menace. Okay, sorry guys. So she loves to shred paper and plastic. And so my goal with that one was to test not doing, so I am managing it as far as I'm the point of contact, but a repair comes up, I'm not doing it. I'm not dealing with the lawn mowing, blowing out the sprinklers, all that type of stuff. And so we've only had that one for a couple of months, but I have literally only been to it once, which for me is crazy. And so I know to scale, I think I probably need to continue to do that, but I want to maybe invest in an area where I can't just run over there and do it, because it's been hard for me to, like, the guy that was going to blow out my sprinklers for the winter, he extended and was like, I can't do it this day. I'm going to do it this day now. And I was like, oh, screw it. I'll go do it myself. And then I was like, no, don't go over there. Do not go over there. And so, I think I might have to invest in an area that I'm not, so that I can just release the control and maybe set up a team. But the scariness is, we've heard all the horror stories, and we've all had an experience with a contractor that wasn't showing up reliably or walked off the job and took your money and isn't finishing. So that's really scary. But I think to scale in the way I want to scale, I think I maybe have to have my projects going here, but also have projects going somewhere else. And then we had talked about too, just talking to some of the people in the school community and the numbers, my money could go further in another market. So I'm looking at somewhere that investment, maybe I can be doing more at a time or more quicker, because I'm getting a better return on my money. And so, like we had talked about, something in one of the accountability group on Sunday, you were talking about something that rents for $1,850 and being all in maybe at $100. To get rents of $1,850 here, I would probably have to be $275, $300,000 purchase price. And so it's crazy to think about. I could be buying 3 things that have that return versus one thing here. I think I have to have the courage, because it's really scary to go somewhere else. I mean, you've done it. Lots of people have done it. I'm very scared. I know it's the right thing, but to take that first step and that plunge is very scary for me.
All right. So after hearing all of that, anyone that is here listening, if you guys have any thoughts or advice, maybe throw it in the chat. I do want to say, if you guys don't know, Emily has joined the school community. She hasn't introduced herself there, so she is, she's in school. So go follow her if you have any
I'm
questions for her.
commenting. Are you
Yeah,
supposed to say, hey?
no, you don't know. So people normally introduce them. It's just it's an easy way for them to level up because
Okay.
it unlocks free things, right? It unlocks some of the courses and everything. But I'm just giving you a hard time about it because a lot of people here are in school and may not have known you joined. So definitely, yeah, go follow Emily in school. I think we have convinced her and her husband to come to Vegas for the one rental at a time event in February. So it sounds like they'll be joining us there. But yeah, throw in your thoughts. If maybe she should pivot and invest out of state, or should she try to double down in her market where maybe she's doing too much work and she may be slowing herself down. But if you have any thoughts, put it out there. Yeah, we'll definitely, like I said, we'll talk more about Pittsburgh. I know Ollie's been a great resource for Detroit, so those are two good markets. But yeah, I think the biggest thing, the fear thing is if you did it and you didn't know anyone there, definitely that's where a lot of the fear comes in. But I think you have a good support group, whichever market you decide on jumping into, right? So, whether it's Pittsburgh, whether it's Detroit, I mean, even Texas, there's a lot of people in the school community investing in Texas. So there's a lot of good resources, and you just, find maybe what's far enough away where you can't just drive there, right? Or, but at the same time, have a good support base where you can bounce ideas or have a networking. Alex, the accidental investor, who has maybe the second or third. He runs the second or third best accountability group in school. The best one is the Thursday, the Pittsburgh one, run by Jack and Harrison. But Alex does say, Emily, I can relate to your approach on initial rehab and how your real estate investing has influenced your friendships, other aspects of your life. Oh wait, I can relate to
Are
you.
you because I talked about once where I did a flip, and I did it with a friend and we bought them out, but it was kind of everyone had the best of intentions, but they weren't really helping. And then I wanted to buy them out and they wouldn't let me. And it took a long time for them finally to say, okay. And I bought them out for much more than I thought their contribution had been. And I talked about that in a podcast once. So I'm wondering if Alex saw that podcast where I talked about that, because it was a friend. It was someone I really trusted, and I don't think their intentions were bad. But, I'd be going over there working till 3 a.m. and then they'd work like 3 hours on a Saturday once or twice a month. And so I'm wondering if he heard that.
Could be. Alex, maybe you can clarify a little bit if you have a question there. Alex also does say, I'm trying to become more of an investor and less of a collector. I don't think he liked my comment about being the second or third best accountability group. But I do see SK here. Not sure if I've seen you here before. Thanks for stopping by. Please hit the like and subscribe and go check out Emily's two YouTube channels she does have. I'll put it in the chat. But SK is asking, what's your take on Austin real estate? Do you have any thoughts that you could throw out there? Or
So personally, I don't know anything about Austin. I love Texas, but a couple thoughts. So the first is just from hearing other podcasts, and I don't know, I have no stats to back this, that Austin overbuilt during when there was a shortage of housing during COVID, during 2019 to the last year or so. And so there's a lot of new development there. And so for rentals, and again, this is not my firsthand experience, that Austin specifically has a lot of inventory. And I don't know if that's true. My other concern would be when you start to look at, and again, not trying to be political, more liberal areas, they tend to be less landlord friendly. And so Texas as a whole is more conservative, but Austin is pretty liberal. And so I don't know potentially what would be put in place that would make it less friendly. If you have a conflict, you have to evict somebody. I know most of that's based on state statute, but I steer away from more liberal areas because I get concerned about my rights as a landlord if I have to evict somebody.
I think I would agree with pretty much that whole statement. I think the only thing, and I think, yeah, so kind of to your point, I'm not sure, SK, if you also follow Dion from Dion Talk Financial Freedom, but his kind of stance is I don't mind investing in a blue state, but I want to invest in a red county, right? So you may have a blue state that's overall, but certain counties might have a little more red policies, right? So that's kind of his take on it. But overall, I think every market is specific to their market. So you got to find people investing in your area, but definitely Texas has seen a lot of boom, but it does seem to be going down in prices just because of, like Emily touched on, they did overbuild, and I think people are having property tax issues, and even I didn't know, I didn't realize there's so much hail in Texas, and I believe that is a big problem for insurance policies in Texas. Um, so Alex, to clarify what he was saying, he says, you mentioned these communities help give your regular friends a break from your real estate enthusiasm. I think we can all see on these live streams how enthusiastic you are. So is that kind of, you like these communities for those reasons?
Well, I think we all probably feel this a little bit. And it could be whether you're into real estate investing or whether, the joke is like a vegan and a CrossFit person walk into a bar who tells, each other first or whatever. People generally want to talk about things they're excited about, first of all. And then, second of all, when it's an investment, it's nice to have somebody to bounce it off of. And I know for me, whenever I find like I don't have in my area investor friends. Like I have clients that are investors that I'm the resource for. I have people that are investors that were mentors, but they're in a very different phase and have different goals. And it's really changed. And then I have my husband who is like, I don't care, just buy it. Like whatever you want to do. Just like he's supportive. But if I'm like, hey, let's look at these numbers, let's break it down, I'm like seeing his eyes glaze over, you know. And so to have somebody or a group of people that is like-minded that you can bounce ideas off of, that you can share, here's the nitty-gritty. And also they may be a competitor because you may be investing in the same market, but I'm not going to go to the person who I'm going to bid against at an auction and be like, let's talk numbers, you know? And so it's nice for all of us to have somebody that you can discuss what you're passionate about, that you might not have that in your life. I mean, I don't think most people have somebody who has this common interest. If you do, it's a blessing, but I think we all probably don't have a lot of that in your everyday to day life.
Yeah, like you touched on, I mean, it's very fortunate. Your husband is very supportive. I think that's a lot of the struggle. Sometimes people, the spouse is not on board. But it's funny, like you said, he has the glaze over his eyes when you mention certain things. But I haven't met him or actually talked to him, but I did notice once Vegas was mentioned, he's like, "Yeah, I'm in. Let's do it, right, for the Vegas." He's like, "I'm down."
He just likes to have a trip. So anything that's just something different, because we're a small town. So the funny thing, like we don't drink, we don't even do anything wild, but just to go somewhere where there's good food and it's a change of scenery and it's not -20 in the winter, he's like, take me there.
I do see Lauren Elaine tuning in from Instagram. Lauren, we're still waiting for your YouTube channel to be launched. So I'm going to throw that out there, put you on the spot. But she said it'll be out by next week, I believe, is what she said yesterday on the live stream. SK is saying, do you agree with Dion? Do you buy for appreciation? So Emily, do you buy for appreciation or cash flow?
Both, neither, depends. I mean, I think it depends where you're at in your journey. I think that, appreciation is almost like stocks. Like you want to buy it, and I am not here to, I have no advice for anyone on stocks. I don't know a lot about that. But you want dividends. But when you look at people that have really grown wealth in the stock market, a lot of times it's appreciation. But that's kind of, there's some education there and there's some luck. When you're starting and you want to be able to get another loan, you have to have cash flow because your debt to income ratio has to look a certain way to be able to get another traditional loan. So you can't just start and go for appreciation. I now, not my first property, but some of my middle properties, I have bought properties that like I have had properties where people were willing to sell or finance them for me, but they said this has to be on a shorter note. I have bought properties that do not cash flow at all because when I bought them, I was very, very familiar with the market and very comfortable with the market, knowing it would go up, or also that I have another income. I do invest, but I also have another job. And so if you're trying to quit your job, which I feel like it seems like a lot of people are, you might need more cash flow. Or if you need to be able to get more loans that depend on that debt to income ratio, you might need more cash flow. But I have one property that when I bought it for 130. It was on a 15-year note because the seller financed, but I didn't have to put anything down on it. And so I was like, of course, right? Similar properties in the neighborhood now are selling for between 180 and 199. And so for me, it was like, I'll get it paid off faster. It's kind of like a retirement account because I know it's going to go up in value, but also they're contributing to my retirement account for me every month when I rent it. And so now the rents have gone up enough where I wasn't making any money. And now I cash flow a couple $100 a month on it because I knew my market and I really was familiar with it. That's not something to take risk on if you're not comfortable with the market or the appreciation of your market, or maybe you don't have a job, because I could have covered that mortgage, whether it made money or lost money or whatever, because of my other properties and my job. So I think you have to look at it as a whole as far as what your goals are.
Lauren Elaine does say yes. She'll have her YouTube channel out next week, and she says, "Sounds like you and your husband need a trip out to Hawaii."
Oh, yeah, he would love that. Absolutely. He's like, "How are you talking to people in Hawaii and we haven't gone to Hawaii yet?" Like, yeah, we have not been. So we're trying this year. I think he really wants to take a trip, and I think we might go somewhere else, but yeah, he definitely would love to go to Hawaii.
Now I just gotta convince Dion to come out to Hawaii. He's very against it, but I'll
Why? How
convince
do
him.
you have to convince someone to go to Hawaii?
Well, Dion has his reasons. He thinks I'll leave it at that. But Ali does have it. Well, I'll answer that real quick though. So yeah, I'm cash flow day one. You know, appreciation is nice, but it's not something you can bank on. So I'm definitely purchasing for cash flow. I think you do need a certain base first. You know, you need a certain amount of cash flow, and then you can start looking at maybe not necessarily appreciation, but properties that may appreciate more. So you still want cash flow day one, but your margins may be a little bit slimmer after you have a certain amount of cash flow coming in. And so you still want, positive cash flow on day one. It's just the cash on cash might be little bit lower, but the appreciation might be higher. So once you have enough to cover up some mistakes from your overall portfolio. But Ali does have a good,
Can I say
Jan,
one more
yeah.
thing on that before we go on? I also think other people's money paying off a property for you is a thing to think about. I have a friend who is a doctor, and so they are high income, and so they buy properties that are pretty ready to go. They don't need the cash flow, but his mindset is when I retire and someone has paid these off for me and I have put in the down payment plus whatever repairs over the years, these are just another contribution to my retirement. So I think that really depends if you're a high income earner, because I'm really good friends with his wife. Sometimes she'll say he wants to learn how to do this. I said, I need you to tell him to figure out what 1 minute of his time is worth, and if it's worth him going and fixing anything based on what his salary is. So that's a factor too.
All right, let me
What are
let
you
me skip.
laughing?
No, let me skip over Ali's real quick because I'll give
Okay,
Dion did put his response in the chat. So he says Hawaiians hate mainlanders.
I've
They
heard
have
that.
a section of the state as its own nation. We are invaders. They call us Howleys. You are not safe there, not away from the tourist traps. Dion, you'll be fine. Trust me.
Do they hate all mainlanders or do they hate white people? Because my husband is Mexican. So would that help us at all?
They do not.
Be real.
It's just like anything. It's a lot of it is clickbait. I mean, there is a lot of pushback. I'll say that, but a lot of times it's also because of how sometimes people behave when they come here,
Mhm.
and it's just like anything. You go to someone's home. You're not going to go to their home and you're gonna, tell them that they should be doing certain things, or you're going to be respectful. And if you do that for the most part, you will be fine. But definitely there is there is a little, their land was stolen, in a sense, and there's always going to be some animosity there. But for the most part, if you're respectful and willing to understand and embrace their culture, I mean, most of you, yeah, you're fine.
There's a
Um,
lot of this out right now on Japan and how disrespectful tourists have been and them making changes. So my husband, I think we're going to try to go to Japan next year. So he's been doing all sorts of research on the culture. I mean, down to we talk on the phone, we're loud all the time. Be quiet in public spaces. You don't need to be watching stuff on your phone. You don't need to be talking on the phone. Like, to me, that's common courtesy. But like in Japan, they say they're quiet on the subway, but Americans are yapping and yelling and whatever. Like, don't pollute the public spaces with your noise and aggressiveness and just stuff like that. There's a lot out there on how disrespectful, and they're talking about it too.
yeah, if I had to say, so I went to Japan for the first time last year in the summer, and yeah, they're very respectful. It's super, like even on the subway or the train, people wear their backpacks on the front, right?
Yeah.
So yeah, they wear that. There's no trash. I mean, this is for different reasons, but there's no trash cans anywhere. So you have to basically carry your trash wherever you go and
But people
dispose it.
do.
Yeah, yeah, but I mean that was for bombing security reasons, so they got rid of it. So there is no trash cans anywhere. But yeah, they're very respectful on those fronts. But I do have to go soon because I have physical therapy today. But let's get to these last few. So Ali does. I think this is a good point for you. Investing outside your local market will enforce you to learn, delegate, and work on your business, not in it. Also, it will make you network with other investors, and that may open lots of opportunities. Hmm.
I've seen, who said this? I listen to so many things. So it could have been one of you guys, it could have been somewhere else. But somebody said investing out of my area made me treat, or maybe they didn't say it. Maybe it was something about starting to treat their business, their investments like a business, not investments. I can't remember what, and I keep hearing it in my head, but I can't remember what it was. But I want to systematize and treat it like a business versus I'm just handling all these parts. When we bought the fourplex this year, I thought, I can't take one more thing on if I don't systematize this, doing it all myself. And I think investing out of my area will force me to systematize it.
Okay, we'll go. Let me pick one more, and I want everyone to know that Dion will be going live probably shortly after I wrap up, and he's going to be talking about if you want to be rich, don't do what the rich do. Another Dionism he's throwing out there. I'm gonna have to tune in. So everyone, Dion will be going live shortly after I wrap up. But let's see. Let me pick one more. I do see Lynn's question right here. Then let's go with Lynn. Lynn is asking, Emily, do you also hold long-term investments like index funds, and how much of your net worth do you keep there, if any?
5%. Gosh, I'm not good at math. 5%, maybe two. So no, I don't love the stock market. I like to be in control of what my money does. So I do have money in the stock market. I do have index funds. I do have dividend stocks. I do have non-dividend stocks. Um, I'm not super familiar with it. And I also think it limits my ability to buy. So if I think about the return I'm getting on that cash and the return I could be getting on that same amount of money as a down payment on a rental or as the rehab budget on a flip, I have very little of a percentage in the stock market. I think when I get to the point where I'm slowing down on real estate, I may hold more in index funds just as a placeholder, but I'll put money in the stock market and I've never taken money out. So when I put it in there, I look at it like that's staying in there. But then I start to go, if I want to buy something, that literally could be, the down payment on a property or my rehab budget or whatever. So I don't have a lot in the stock market. I'm not saying that's right or wrong, but I think it slows me down because you have to have unless you're really smart with stocks, you have to have a lot of money in there to make the returns that I'm making on investment property.
On that point, I'll save it for. I'm not sure if Dion was going to release it. I forgot. So he did have a course call. Michael Zuber was the special speaker for that day, and Zuber had an interesting take on the stock market and what he said. But I'll leave it at that. So you got to join Dion's course if you want to hear those type of discussions going on off camera. But I'm not sure if that video is ever going to be put out on YouTube. But yeah, he had an interesting take on the stock market. One last thing then with Lynn, hope like you said, you'll probably be in Vegas. Sounds like hopefully get to meet Lynn. Lynn's Super cool investor. She has her own YouTube channel. She was just on Bigger Pockets,
Oh,
a
I'll find
rookie
it.
recently. But she is very against Costco. I forgot if we brought this up to you before. And do you shop at Costco? She believes
I've never
makes
been to
people
a
overspend.
Costco.
Really?
Mm-mm.
Oh my goodness. What's wrong
I don't
with you
think so.
people?
I Well, I live in a small town, first of all, so we don't have a
Oh,
Costco. So I'd
oh,
have to commute for it. And the other thing is we have a small family. It's just me and my husband. So we don't buy in bulk. We don't meal plan. We're scrambling at 9 o'clock at night trying to figure out what we're going to have for dinner. So we just are not, we're not those people. But so I've never been to one.
all right. And the last thing I'll say is Flavio, you need to join YouTube Premium. That's how you get rid of the ads on my channel. So
Uh,
that's how you can avoid that. See, Lynn says, my girl. Well, you know what? We'll
Good,
schedule
I'll
one.
find your YouTube. I'll go subscribe.
Here, I'll put it. It's Lynn does investing. So,
I wrote it.
okay. Here, let me just throw it. So, those of you that haven't subscribed, go subscribe to Lynn's channel. She's super cool. She's going to be live streaming on, she does a lot of hers on the weekend. So, she'll be live streaming on Saturday. And I think she does it on Sunday also with Jack and Dylan. Hold on. Oh, no, there's school. And go look for Emily in school. Go subscribe to Emily's new YouTube channel also, so we can get that caught up to her DIY channel. I don't know
Oh
how
man.
fast. Yeah.
Hopefully.
Um, yeah, but there's Lynn's YouTube channel also. Go subscribe there. Sorry, folks, I do have to run. I have physical therapy I gotta get to. I will be back twice tomorrow. Actually, tomorrow I'll be back at 10:45 a.m. Talking about fractional real estate with Joseph Cachapalia and someone from Souls Lot, which has the most Googled property I saw on the internet right now. So I believe it's Kanye West's property, but it's on Souls Lot, I believe. So I'll have them on, and I'll be back at 1 p.m. Eastern with skip tracing from Pinpoint Skip. So it's a new property, a new product that they reached out to me. They want to be on the channel. So definitely, I'll see you folks twice tomorrow. Go check out Dion's channel. He'll be going live soon. Emily, thanks for doing this. And I'll see you at the best accountability group in school at 3 p.m. Eastern, the